Hi everyone, my name is 𝗙𝗶𝗫𝗃𝗃 and I am a finance and fintech consultant. Let's review the objective of corporate finance with an AI perspective. So in this short video, I am going to explain the single financial objective that guides every company, the core finance functions that support it, and the key decisions leaders make every day. Okay. Plus, how AI and technology are quietly changing the way all of this works. All right. And so by the end of this video, you will see corporate finance less as numbers and more as structured decision making. All right. And now imagine you are the captain of a ship and your crew expects you to reach the destination safely and make the journey worth the effort, right? And that's exactly what finance leaders do every day. Okay. They guide companies through uncertainty, interest rates, inflation, and markets while still creating value. So today, I will break down the core financial objective behind every major business decision and how AI is changing how that objective is achieved. So let's start with the big picture. Now, think of a company like a garden. Shareholders are the people who planted the seeds. They invested time, money, and trust. And their expectation is simple: the garden should grow and produce more value than what they put in, right? And that's why the primary financial objective of a company is maximizing shareholder value. So, what does it even mean by that? In real terms, that means generating returns higher than other investment options, using cash, people, and technology efficiently, making decisions today that create value tomorrow, not just this quarter. And for example, if you invest $1,000 in a company, you expect that money to grow faster than if it set in a savings account. Okay. This is where AI comes in. Modern analytics help companies measure value more accurately, forecast outcomes faster, and identify bad decisions before they turn into expensive mistakes. Okay? So, to make this happen, companies rely on a few core finance functions. Let's look at that next. So let's review the 5 pillars of finance next. Okay. Every company depends on 5 core finance functions, and think of them like the fingers of a hand, right? Each has a role, but they only work when they are aligned. So, what is our first pillar? Our first pillar is accounting, which I call it the scorekeeper, right? So what does accounting do is accounting records every transaction and shows whether the business is winning or losing. So it's like the scoreboard in a game. AI now automates many accounting tasks. Okay, that helps reduce errors and speed up monthly closes. On to our uh, second pillar, which is funding. And I call that the resource gatherer. Funding is our resource gatherer. And it decides how a company raises money through debt, like loans, or equity, like selling ownership. See, AI models can now simulate different funding options before decisions are made. The third pillar in our case is capital budgeting, and I call it the project evaluator. Project evaluator in our case, okay? And this function decides which projects are worth investing in by comparing cost, risk, and expected returns, or ROI. Predictive analytics improve how accurately companies estimate return on investment, or ROI. Okay? So our fourth pillar is financial planning, and I call it the future mapper. The future mapper. Financial planning forecasts cash needs and growth, so the company doesn't run out of money. Okay, and AI enables rolling forecasts that update the near real time instead of once a year. So real time versus updating it once a year. That is how AI helps in this case. The fifth pillar is risk management, and I call it the safety net. Our fifth pillar is risk management and or the safety net, right? So risk management protects against things like currency swings, interest rate changes, and the market shocks that we experience every once in a while, right? So how does AI help in this case? AI-driven alerts can flag risks early before they impact cash flow. Okay, that is why you would use AI. Now, these functions all feed into a small number of critical decisions. So no matter the size of the business, leaders face four major financial decisions. And decision number one has to do with capital structure. And our classic question related to it: how much debt versus equity should the company use, right? See, too much debt increases the risk. Too much equity, on the other hand, can be very expensive, all right? And so how does AI help in this case? AI helps test stress scenarios before committing. So use AI for stress testing and decision making in this case. Our decision number two has to do with investments. Okay, so where should the money go? New markets, better technology, or our process improvements? And frankly speaking, sometimes the smartest decision is saying no. Just say no, right? Our decision number three has to do with financing timing. And the classic question is, when should capital be raised? And on what terms? And in this case, technology helps companies act quickly when the timing matters or when the timing is right. On to our decision four. That has to do with dividends. Okay? And related to it, the classic question is, should profits be paid to shareholders or reinvested? See, mature companies often pay dividends, right? Growing companies, however, usually reinvest to scale. In this case, data helps align these choices with shareholder expectations. Okay. So why does all of this matter to you? So why does it matter to you? So whether you are running a small business, working in finance, or investing your own money. These principles help you ask better questions, spot strong versus weak companies, and make smarter decisions. And this is where mindset matters, okay? Don't just improve, evolve. Corporate finance isn't about spreadsheets. See, it's about decision making. And today, AI and technology are reshaping how those decisions are made. If you are looking to strengthen your financial strategy, modernize treasury operations, or simply understand how these ideas apply to your situation, I would be happy to help. Drop a comment or reach out. Smart financial decisions are the foundation of sustainable growth.